Hey everybody, this is Michael Tran. I'm just doing a quick video on the real estate market and where I think it's headed. The two charts I have up is the interest rate at the bottom, and then the Dow Jones Equity, which is the real estate investment trust. Um, as you can scroll back to 2007, 2008, this is when the crash happened, right? And during that time, what we had was like a 6% interest rate, and people were over leveraging and buying it with basically nothing, right? So eventually you see a big sharp downturn, right? Big crash. And that crash, you're looking at like a 60-some% drawdown, you know? And during this time, like if I were to go back, this is the time to buy, right? This is the area to buy, right? And now, fast forward, 14, 15 years, we're over here, right? Same thing is happening right now. Look, 6% interest rate, market's taking a dip right now, right? How do we know when the market has bottomed? All right. Well, you just gotta look, right? Back there is 65% when it started dipping, right? Right here, we're only like halfway, right? 24%. So we still got a long way to go. And then when the market bottoms, you're gonna know. And then usually is when people are not buying anymore. And then it's gonna be an oversupply. And it's gonna be less demand. There's gonna be less people looking for homes due to high interest rate. And I would pretty say like around this price right here, down here, when nobody wanted to look at the real estate market because a lot of people that bought up here at the peak because they got tricked with a low interest rate with a low monthly payment, but they don't realize their home is going to take a long time for them to appreciate. You bought up here, like people were overpaying like 40 to 50,000 based on what the price was appraised for because they were led thinking that the house will keep going up, and that's just nonsense. And then if you look at this window back in 2008 to 2009 to 11, during this time, this is time for you to buy, right? You have like 3 years, so when the market starts stabilizing, it's gonna be plenty of time to buy, right? Has this stabilized yet? No, not yet. It's still trending down. The bottom is not in yet. The market has not reacted to the interest rate. It slowly has, but the oversupply has not hit the market. So just give it some time, and then look at XBX, right? This is the freaking stock market. Look at this: low interest rate, peak of the market. High interest rate, we're trending down, and hey, we're probably gonna still trend down a lot lower, and then people 401k is gonna get smoked, and they're gonna be forced to start selling their real estate. People say it's a head towards inflation. And then if you look at the dollar index, look at this. Look how strong this is. Like people say, cash is king right now. Do you know what you could do if you stack up a lot of cash within the next 2, 3 years in this recession? Buy a lot of shit for cheap, dirt cheap. Everything dirt cheap. And then this one of the guy I follow who does real estate. He's a real estate developer. Da, da, da. You read his comment and say there's no housing crisis is a false narrative. Shortage is a temporary problem created by artificial monetary policy, not witnessed in centuries. When the cheap money punch bowl is taken away, demand will collapse, oversupply will remain, and mortal will again replace. And then such false narrative are near the peak of every great price run and above without history. Don't look for real estate spreadsheet to justify funding up. They are concerned from confirmation bias and availability within their echo chamber. This guy got it right on point. Look, this is when the herd was basically buying. Inversion can never be remembered. When real estate was dirt cheap, everyone was negative. Instead of believing the consensus narrative, real estate was struggling for years. Why would real estate not continue to struggle? Okay. So around that time, 2009 to 2012, when everybody's walking away from the market, that's when you should be looking to buy, things like that. So that's just my view on the market state right now.